Good afternoon, everyone. It is Sunday, May 30th, and it's Memorial Day weekend. Contrary to popular belief, Memorial Day weekend is anything but just another weekend with 3 days in it that begins the summer. It is also obviously to remember those who died while serving and defending our country. So I'll start by saying thank you to all those out there who have bravely served our country over the years, and certainly to remember all those who perished, making sure that the United States is the United States, the greatest country on earth with the greatest freedoms on earth. So with that, it is a very windy and rainy Sunday in New England. Feels more like early March, late February. I think we had weekends in January and February that had better weather than this. So I still have fleece on, and I had long underwear on yesterday. I am hoping for better weather as the month turns and June begins in 2 days. In any case, as always, if you like the video and you enjoy what you see, please give it a thumbs up on YouTube. I appreciate that. If you have any questions, comments, concerns, certainly you can text me, you can email me, you can call the office, you can schedule a meeting over my online calendar. Always happy to have a conversation. Today, we're going to do something a little bit different. Most of my videos, as you know, we talk about the markets, we talk about some geopolitics. This is a little geopolitics, but it's very long term. So it'll be a little bit unusual. And what I don't want to happen is I don't want someone, so this came about because I got the same question a number of times. And that's how so many of my videos happen. When I get the same question over and over, I kind of feel that a lot of people have similar questions in their mind or are confused. So that's where I want to go. This is not going to be my normal upbeat, rah, I'm really happy, everything's going to be great video. But I did want to address some comments and questions with the utmost sincerity and candor. So that's what I'm going to do. It has some long-term negative. I'm cautioning you. It has some long-term negativity to it. It's not my normal buy the decline or the big decline's coming, but from there we're going to be much, much better. This has some scare in there long term, and it's not I'm trying to scare anybody. That's not my personality. I don't do what some of the newsletter writers do, which always makes me laugh, where they turn every scenario into the death of the United States. No, it's not my point. I just want to. People always ask me, what keeps you up at night? What bothers you? How are we going to get to a place that doesn't look all, what do they say, unicorns and rainbows? And this is the scenario. So let me talk about it for a little bit. It's a scenario that I've mentioned it on TV a lot. I've written about it. I haven't gone much further. And today I'm just going to scratch the surface, because I'm not saying this is going to happen. I'm just saying it's a possible or plausible scenario. So I'll preface it by saying, as you all know, I am fiscally conservative. I am now. I always have been. That's just how I am. That's how I'm wired. I am a fiscal conservative. However, I also, for those who are part of, I forgot what that movement is, which the Republicans took in Congress about never raising taxes. That's not also in my DNA. Using the words like never and absolutely not on things, you always get proven to be wrong, or you look foolish. So I'm not going to say never, ever for most things, but I am fiscally conservative. On the flip side, I don't support a balanced budget amendment in Congress. Well, Paul, how could you say that? I'm speaking the third person. How could you say you don't support a balanced budget amendment? Because the way the modern economy is, there is no political will to go through depressions. And frankly, in 2008-9, there would have been a modern day depression. Now, a lot of people said, or may have said, it would have been better. And long term, I agree. If the government did nothing, the economy would have been a whole lot stronger long term. without all the aid and manipulation. But there's no political will, so let's not fool ourselves into thinking that we could all sit back and watch unemployment go to some 20 or 30 something number. The same reason I was on record vociferously in March and April of 2020, everywhere in the media as well as here and on in my newsletters regarding what I thought the Fed and the Treasury needed to do. To me, it was there was no other solution. They had to go to the unfathomable, unthinkable, and a balanced budget amendment wouldn't have let them do that. So I'm not. Yes, I'm fiscally conservative, and you could say, well, you're not. Well, in my mind, I am, but I don't think that a balanced budget amendment in times of recession or worse would serve the country well. So that's why I'm not for it. Now, let's go on. I have a couple of charts I'm going to show you. People always, what keeps me up at night? What bothers me? Why did I start doing the video? So the video came about because I had a lot of people ask me about the $6 trillion budget that the Biden administration just released this week. If my memory is right, and it may not be, so if you want to correct me, you're welcome to. I believe the last budget Trump proposed was 4.5 trillion. I remember saying at that time, it's absurd and outlandish for the government to spend $4.5 trillion on their budget. So when I saw the Biden budget, that was 6 trillion. I don't know what, I'm running out of adjectives to describe it, but certainly since the second term of Bill Clinton, whether it be Bush 2 or Obama or Trump or Biden, and this is not a Republican versus Democrat thing in my view, those four presidents have gone to lengths I could never have fathomed early in my career with spending. So you're going to say, oh, you just want to cut social programs. It has nothing to do with cutting social programs. It has to do with where the system and where the trend is going. So I'm going to pause there and go in a different direction. And I'm going to ask you, what is problematic inflation? What is systemic inflation, like we saw in the 70s, like we've seen in Argentina, like we saw in Germany post World War I, like we saw in Zimbabwe? And people would normally say it's too much money chasing too few goods, because that's what some idiotic economics textbook may have said, or may say right now, written by someone who's never worked in the economy. And while that may make intuitive sense, that may be just run-of-the-mill inflation. But real systemic, long-term problematic inflation is not too much money chasing too few goods, frankly. It is when people lose faith in their currency. And now people can start yawning and saying, what the heck, where is he going with this? If you look at all the great empires in our history, in the history of the world, look at the Ottoman Empire and the Roman Empire and the British Empire, and I'm sure there are other empires I'm not thinking about, but great societies end up rolling over and ceding leadership. If you look, the German Empire, it happens because of a collapse in confidence. And that collapse in confidence translates into, I'm not going to pull money out of my pocket because I don't have anything in there anyway, but when your currency begins to collapse, that's the end of the loss of confidence in your government, in your system. And that's when real problematic systemic inflation takes place. And I'm not saying that's happening today, although my thesis has been for the past, 10 months that we are in this inflationary period. Doesn't have to end up like Germany, post World War I. I will always argue, people say Hitler came about because of authoritarianism or media control or manipulating the public. No, that's not true. And I'm happy to have this argument with anybody on earth. If the German economy, but more specifically, if the Deutschmark did not collapse after World War I in the post-Weimar era, because the Germans were forced to pay the world all those billions of dollars in war reparations, if that didn't happen, Hitler would never have come to power. Oh, Paul, how could you say that? You sound like an idiot. Because that's fact in life. You need the ground to be fertile for lunatics to come to power. And someone as crazy as Hitler came to power because he preyed on the weaknesses of the Germans. And what did he prey on? Their economy had totally collapsed, the likes of which we have not seen since the Depression. It collapsed because people lost faith in the currency. And why did they lose faith in the currency? Because the Germans were printing money I can't fathom the lengths, the magnitude of how much money they printed because the Allies made them pay war reparations. And in hindsight, we would have done it a whole lot differently. But we don't benefit of hindsight doesn't help us for post World War I. The world and certainly the Germans lost faith in their currency. That's when large or the leading economies have problems on earth, is when people lose faith in your currency. The currency market is this big, the bond market is this big, and the stock market is this big. But very few of us and you invest in the currency market. And I'm not saying, now people go back and say, well, the dollar was really weak in the first quarter of 2008. Certainly was. The dollar normally ebbs and flows in a range, and it goes up and down in a range over time. And that's how currencies typically fluctuate until some kind of outside event like a meteor hits it and changes the path of the currency for the worse. Look at Argentina, look at Zimbabwe, look at Germany, go on and on and on. So how am I tying this back to today? First of all, I don't believe that a $6 trillion budget is going to be passed. So my foundation argument is going to say, I don't believe it's going to happen. But if you want to ask me what I think could happen, if they pass a $6 trillion budget, because you only need in the Senate simple majority. Well, you've got 50 Democrat senators plus Vice President Harris to break the tie. If all 50 Democrat senators vote for that budget, it will pass. Again, I'm saying I do not believe it's going to pass. However, if it does, and we spend $6 trillion on a single budget after having printed now between the Fed and the Treasury, I think we're between 11 and 12 trillion dollars. Our national debt is going to be, by the time the next presidential election comes in 2024, our national debt should be 30-something trillion dollars. And now we've all lost the ability to fathom it was 20, now it's 30, so what, right? So what? Let me show you a chart, which I just saw. And where's my chart? There it is. Okay, let me show you this chart. And this is global debt. Who do I give credit to? The Bank for International Settlements. Someone sent this to me. So this is global debt as a percent of the global economy's output. And what you'll see right now is global debt to GDP. So how much debt as a percent of how much the global economy produces is at about 280%. After 2008, when the world was ending, we were at 240%. And that was thought to be about all the global market could handle. Because remember, what is debt? When you borrow, you're making a pledge to pay back the person you borrowed from. Well, you're now at 280%. I would say that is heading towards the untenable. I've said this on a number of media outlets. The US debt is fiscally impossible to ever pay back. You cannot pay back the almost $30 trillion we borrow. Can't do it by conventional means. So if you can't pay back your debt, how does it end up working out? Well, you get to that fork in the road and you have a bad outcome and another bad outcome. What's my view? My view is that at some point, like when you file for bankruptcy as a corporation, you go into workout and you try to pay cents on the dollar, whether that's 95 cents on the dollar or 5 cents on the dollar. But the global economy, the global central banks, the countries, we cannot pay back our debt ever, ever, ever. It's never going to happen. And a lot of people believe that when you borrow, you pull forward growth, meaning what growth may happen in 2023 or 5 or 30, you're borrowing now and you're pulling that growth forward. And the more debt we have, the harder it is to really grow the economy over the long term because debt overhangs it. Yes, as I said in January, the 2021 GDP growth is going to be the best since Clinton or Reagan because of COVID and the shutdowns. That's artificial. That's not sustainable long term. And we all know that. It doesn't matter who you voted for or whether you're fiscally conservative or fiscally liberal, that's not sustainable. So my worry is, getting back to the currency, my worry is if we start, it's not that we pass a $6 trillion budget, is that we get into this thing called modern monetary theory, or MMT. I don't know who first coined the term, and it's not relevant right now. And it didn't start with Biden. It didn't start with Trump. We were kind of heading in that direction. But the idea is that whatever you need, you just print money to pay for it, and the world will be fine. It's not true, because eventually people will lose faith in your currency. And when that happens, look out. So what could really happen? You're going to ask, like, why am I throwing a scare tactic out there? And what am I selling to the solution? I'm not going to sell any solution right now. I'm just going to be candid and tell you how I feel, even though I don't think that budget is going to be passed. Modern monetary theory, frankly, does, to me, and I apologize in advance for being blunt, it's idiotically ignorant to believe that we could just print trillions and trillions and trillions of dollars every year to pay for something we can't afford. Whatever that is, you can't do it. Now, here's the most important part of this video. So if you're still with me, I beg you to listen up. The single most important part of this video is the United States has had the unbelievable honor and privilege to be the world's reserve currency. The world transacts business. The world transacts business in dollars. So the price of oil and wheat, lumber, cocoa, soybeans, gold, the world buys and sells in dollars. So why is that important? When you're the world's reserve currency and people have to transact business in your currency, you can borrow and borrow and borrow and borrow, essentially like a billion drunken sailors, and not worry about your debt. The problem is going to be, folks, when, it's not if, but when the world says, you know what, we no longer have confidence in the US dollar as the world's reserve currency. Let's move from the dollar to a basket of a bunch of currencies. And who's going to lead that effort? It's going to be China. Am I sure? Yeah, I'm definitely sure about that, because what's going on right now with China, you ask? China has very quietly and brilliantly let their currency rise in value. So they would always devalue their currency, so all the labor would flow to, we'd manufacture in China because it was so cheap. Now China realizes what's going on in the world. They're letting their currency go up, 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 which is going to bring them into a competitive situation with the US dollar. Now, we're not going to have the Chinese currency be the world's reserve currency, but it could be in a basket of currencies. And once that happens, that is, frankly, game over. That's the bell ringing, the fat lady singing, where the US is going to lose its economic dominance around the world. It's not happening in 2021 or 2023, and I don't think it's happening in 2025. But we're on a path where that's going to happen at some point in the next, let's say, 10 to 20 years. And it all starts with modern monetary theory, just printing what you need and not worrying about it. And that, frankly, starts with trying to pass a $6 trillion budget. You shouldn't do it. If the economy is good enough where we can raise taxes, we should start to trim our annual budget deficit. So we're in a really tough spot. Now I'm going to unshare my screen and come back to you. Unfortunately, I look at me today. So let me just get rid of this chart. That's what bothers me long term. Do I think it's going to impact, I'm 55. I've got 20 years left in business, at least me working. That's my runway. Is it going to impact the end of my career? Maybe. Is it going to impact the next couple of years? It's not. But people always ask me, what are the consequences of all this debt? What keeps me up at night? This is the single most important thing for me and my kids over the next, couple of decades, is that we're going to get so fiscally irresponsible. We've already done it. Bush did it, Obama did it, Trump did it, Biden's doing it. So for those of you who say, oh, there's Paul, talking his book or supporting I do support the fiscal conservatives, but both parties do it. So it is a bipartisan thing. It's just not the Dems or the Republicans. They're both doing it. They just spend it in different ways, but they're both doing it. And frankly, that's going to be the end of US dominance around the world. It's going to be when people are going to lose faith in our currency. So now I want to give a couple of positive things before I sign off so people don't leave. Don't be depressed. It's not happening tomorrow. We have plenty of time to prepare. And it's not as though our currency is our economy is going to collapse. But if you look around the world, military conflicts usually begin when there's a race to the bottom with currencies. That's how you get everyone all juiced up. It's what happened in the previous 2 world wars. I'm not predicting a world war. Please don't get me wrong. Don't walk away with that theme. It's not one of my themes, but certainly as we've seen in the modern era, we have these, limited, isolated, concentrated military conflicts as currencies weaken. That certainly could be the case over the next, 3 to 5 years. I mean, it wouldn't shock me to have some kind of military, whatever we're going to call it. We won't call it a war because, wars aren't popular, but something's going to happen around the world. Will we be involved? I don't know. I'm just saying the currency is the most important thing in this country for the financial system. Keeping your currency at least stable in that range. And for the US dollar, there's an index, the US dollar index, it's between roughly upper 70s and to maybe 120. I think in 87, if I remember, without doing my homework, it was well above 120, but somewhere between the upper 70s and 120 is where our currency is floated. Be very, very, very leery of what's going on in China. They're doing the opposite of what they've done for decades. They used to always manipulate their currency lower to bring labor over there, to manufacture stuff over there. They're doing the opposite right now. They're looking for global dominance. So just keep that in the back of your mind. And I am going to close with 2 things which are not related to this at all. They'll be a little more shorter term in nature. I'm going to share my screen because why not? You don't have to look at me. First one is, here's a chart of Bitcoin. I pull it up because I just get so many questions, comments about cryptos, and Bitcoin is the leading crypto. So I already railed on it last month when it was well over 60,000. And then the Bitcoin bulls came out of the woodwork telling me that I'm a boomer and I know what I'm talking about and I'm ignorant. Okay, that's fine. And now Bitcoin is almost cut in half in a short period of time. It is super volatile, as I've always said. The blockchain technology behind Bitcoin clearly works and is unbelievably impressive, but it's impressive if Bitcoin's at 100,000 or 10,000. The technology is really impressive. An awful lot of people piled into the cryptos at elevated levels. Bitcoin's now 36,000. Do I think it's going above 65,000 anytime soon? I do not. Doesn't matter, because I don't think legally any financial advisor like myself can trade in a crypto on behalf of a client. I heard a lot of advisors talk about it on TV, and when I've emailed or pinged them on Twitter, no one said they do it on behalf of clients. So if your advisor does it for you, I'd like to know how, because it involves taking custody of assets. You could do it in a hedge fund, but I don't think you can do it as a registered investment advisor like I am. So I just want to show you what's going on with cryptos. I was pretty much trashed when I was negative. And now, listen, now it's 36,000. It's a whole lot better than when it was 65,000. I think it probably is lower to go. I wouldn't be surprised if Bitcoin broke 30,000 this year, on its way down to whatever level will be the bottom. And there will be a bottom in Bitcoin. And there are a bunch of ETFs that I am starting to trade a little bit for myself to figure out how to model them for you, our clients. I haven't figured it out yet, but I'll work hard to see if we can make that happen. But the crypto market was crazy. It's still insanely volatile, but it's a whole lot less so at 36. And I think it breaks 30 than it was above 60. Let's stop sharing. And I am going to make one more comment about the stock market, which I can smile because it's a shorter term comment. It's a lot easier. I'm going to share my screen again, I think. Yes, I am. Here we go. I wrote about this on the blog last week, week before. I can't remember. It doesn't matter. As I told you guys, my schedule's been a little crazy in California, and then I'm heading to Florida, and I'm out and about for sure. So if you're on the road and we're scheduled to see each other again, it's been a while in person anyway. It's certainly been since at least January of 2020, if not earlier. So I am so excited to start traveling again. In any case, here is the S&P 500 showing the year to date. First quarter, as you know, was just so much fun. It was a straight up quarter, little pullback in March, but it was a lot of fun. I think the second quarter has been fun too. It's been a very rewarding quarter, not as easy as Q1, but certainly it's been rewarding, and I've had a lot of fun. Look, my thesis has been over the last month that the market's in a trading range, it's going sideways. And that's okay. On the surface, a trading range, it should resolve itself by going up again. Will this time? It's too early to say. The foundation of the market is super strong, which says to me, we're going to resolve ourselves to the upside. Okay. But in 2011, we went sideways May, June, July into August, and then we collapsed 20%. So, but the foundation then was cracking and crumbling a little bit. It's not doing that today. So right now, I would say if we do have more of a pullback and let's do this. Let's call it an arrow. And somehow we go up and down and end below 40.50, maybe 4,000 on the S&P. I would look at that as a huge and strong buying opportunity. If we instead make new highs sooner than later, that I don't know. I want to see how things shake out, what leads if we get above 42.50 over here. But things are okay. It's been easy for folks, and they have, to turn negative too early since this bull market began March 23rd of 2020. As we get on, again, we're only in year 2 of the bull market, which normally sees a 10% decline, at least. So I think we'll see one in year 2 of the new bull market. I certainly do. And I said all along this year, nothing new, between May 1 and September 1, I think there'll be a peak where we have a decline from. I don't think we're there yet. Let's see what happens. We have a new week coming up. Month of June comes up. Not a great month, not a horrible month. So let me wrap up. We covered an awful lot about what keeps me up at night. Long term, let's not worry about it for 2021 or 2022 or 2023. But as an investor, just keep an eye on the U.S. currency. We talked a little about Bitcoin, about where we're going in the market. If you like the video, please give me a thumbs up on YouTube. If you hate the video, let me know. I love feedback. As long as you don't attack me personally, I love feedback. So call me, email me, text me, send a carrier pigeon note to me, whatever you want. You know my online calendar because I put it in every email. I apologize. Some of my publishing schedule is off because of travels, but I should be pretty much regular this week. My calendar I've opened up the whole month of June into July because things are so busy and people are booking up an awful lot of meetings. And I want you to have an opportunity. If you want the opportunity, if you don't, then don't worry about it. Other than that, I hope you're safe and healthy and things are going well and the economy is opening up and we're seeing huge, unbelievable economic growth. It makes me grin ear to ear. So that's good. The economy should be great. It was great in Q1. It should be great in Q2. It'll be okay in Q3 and should be okay in Q4. I don't see a recession anywhere on the horizon. So take that off the table for 2021. This video has gone on long. I know, I knew it would, but I look forward to speaking with you, emailing you, and videoing with you soon. And again, thank you for all who bravely served our country. Take care. Bye-bye.